Hello and welcome to the Andrew Hines Real Estate Investing Podcast. I'm joined here with Aaron Suitor, who's going to be interviewing me today. We're going to change things up a little bit. Aaron, how you doing?
I'm doing good.
Thanks for joining me on the show today. Aaron's got a bunch of questions because he's kind of just thinking about starting to invest in real estate, and we wanted to make today's episode about getting started, what you need to know. What are some of the basics that you can focus on so that you can get the ball rolling, and then eventually, depending on what your goals are, Aaron, and you'll be interviewing me, you can let me know, how to get there. So
Yeah, so just a little bit about me. I just got out of school and I'm into like my first kind of entry level job, and I've saved up a little bit of money now, and I'm thinking about getting into my first real estate investment. And I've been picking your brain, as you know, for a couple months on this, but
yeah,
I'll do it again for everyone else.
Yeah, Aaron's so he's a pilot. We shouldn't skim over that. So Aaron's it's actually pretty cool. So Aaron is, if you find him on Instagram, he's the pilot Aaron, and he's actually Insta famous. So yeah, go look him up.
Jeez.
So kind of a big deal, but being a corporate pilot, Aaron actually had a ton of time off. And he was just kind of sitting around. So he would come with me to London when we were checking out the project, and so he's been asking me questions throughout, and it kind of inspired this episode. Well, these are questions that he has. These are questions a lot of people would have. How do I get started? If I don't even have, maybe even a down payment. I know, Aaron, you're building up some traction there, but some people don't even have that. And, what can they do?
Yeah, exactly.
Yeah.
So.
Okay, well, I will pass the lead off to you. No pressure.
Oh, that's all good. All right. So, as you know, I'm looking into getting into my first investment or real estate investment from the Toronto area. And, I figured the Toronto area is more or less affordable for someone, at least for their first property. And I've seen you go after London. I've seen you go after Niagara. Oh, maybe not quite yet, but you're looking at it and
thinking about it.
And what do you think makes a good market for a first-time investor?
The biggest thing I look for to keep myself safe, quote unquote safe. I mean, everyone has their own interpretation of that. But when I'm buying real estate, I want something that, in a worst case scenario, if I had to keep it, I got to be able to rent that out in cash flow.
Yeah, absolutely. And I've seen you do that. I definitely agree with it. And it makes sense. Even if the interest rates go up, you're still going to cash flow, or you're at least going to break even. You're never really at risk.
Right. And sometimes you think you're going to get one number and you end up getting more. I've had that happen. I generally find that I'll get into a project if I'm buying and selling in my company. I'll get into a project and I'll have one number in mind of what I think it will sell for. And I've been very fortunate that number's consistently gone up. I've been pleasantly surprised probably about half the time, where I've ended up being able to sell it for more. And I know not everybody has that story, and maybe that's unique to my approach. But it's been pleasant, but it could easily go the other way, right? And for instance, in the project I'm in right now, it actually sort of is the other way. It's not that I'm not getting more than I thought I would on the sale. It's that when I crunched all the numbers and what it cost me to renovate, I kind of started to think, well, it's not really worth selling for what I've got into it. I like the thing too much, and I believe in its value, and it will cash flow. So I'm just in the process of refinancing it. So I'd rather hang on to properties. And that's an option, right? The key is, as an investor, keeping your options open. So I got burned a few years back when I invested in Ohio, and I've probably mentioned this on almost every podcast, but it was a huge learning experience for me. I invested in a couple of properties that were really far away from me. I did not have a plan A, B, or C. I wasn't really thinking. I guess it was a plan A: buy them, have my property manager manage a renovation, and then get some cash flow and get $1,000 or $1,500 a month in cash flow between two properties. And I was just so excited. Logic went to the wind. And money, yeah. And I think so many people who are about to get in, they aren't thinking everything through, and they don't know what they don't know, which is a huge, huge hurdle. So going back to picking your market, don't go to your major urban center, but do invest in an urban center. So for example, we're in the greater Toronto area. Buying in Toronto means you're buying in a negative cash flow market that's highly volatile for property valuations. It can go up, it can go down, it can go up really big, which is awesome when it happens, but what happens when it doesn't? When you don't have that cash flow, you don't have the stomach to watch your property go up and down in value. When you do have cash flow, whether it goes up, whether it goes down, you've got cash flow, right?
Yeah, exactly.
Yeah.
And on that note of cash flow, um, you know, we've been talking about cash flow. We've been talking about involvement in the project. So, you're saying Ohio may not have worked out because you weren't able to be as involved as you'd like to be. And that's kind of something that I'm struggling with now. And I'm sure lots of other people are. We work jobs, so we won't actually be able to spend maybe as much time and dedication to value add to the property. So in your mind, do you think it would make sense to buy, a single family unit or maybe an already done duplex? Or do you think it would be possible to do something totally else? Buy a bungalow, turn it into a up-down duplex?
Yeah. So well, you've kind of covered a bunch of different topics, and it comes back to you and what you want to do. For me, I didn't have any significant cash sitting around when I started. I bought my first 2 properties using my own cash, and I was tapped out. I had nothing left, and this was money I saved up from working. And it was like my first year in mortgages, and they weren't taking taxes off the top. So I had saved every dollar I could. My bank account was growing. I felt like a hot shot.
Oh, yeah.
I had like 40 grand, and I bought my second property. I was able to put a full 20% down. And then all of a sudden, May rolls around and I owe like $11,000 in taxes, and I didn't actually have anything saved for that.
Yeah.
So I ended up paying my taxes on a line of credit.
No, geez.
That was a sickening feeling for me, and I hadn't prepared properly. And that was an example of, well, I didn't own my own home, but I kind of felt like I was house poor in a way. I had real estate, but I didn't have access to cash, and I hate that feeling. I don't like feeling like that. So, I'm always very focused on having cash in my business, having cash available to renovate. Every property I have, I keep cash in an account for that property. Whether you think there's logic to that or not, for me, that lets me sleep at night.
No, absolutely. And, that makes a lot of sense. And that brings us to financing, which is probably my biggest struggle. And almost everyone who's, first getting into their first property is probably our biggest struggle. Maybe we do have enough for the down payment, which I guess I'm getting to now, but how am I going to afford a renovation? Or, if some big fixes need to be done soon after I buy the thing, what can I do to finance that?
Well, we'll come to that, but your original question was basically what should you do, right? And it ties in because, like I said, what's your goal? If you want to move fast, then you can't just buy a property 20% down and expect to be able to buy another one next year or another one in a half a year if you're not doing anything active to it, right? I told you I put my 40 grand into that property, and there wasn't anything left over. I'm like, now what?
Yeah.
So I ended up buying the stuff in Ohio shortly thereafter, and I bought that on a line of credit, and which really sucked when things didn't go well, and I still owed that money. But that was a perfect example of, because I didn't have any sort of value add plan, I didn't have a clear plan or goal in my head other than I wanted cash flow. All I knew is I wanted cash flow, but I had no execution strategy. And you have to acknowledge where your strengths and weaknesses are. And if you're getting started, your strength is that you've probably got time.
Absolutely.
You could probably, if you don't have kids yet, you're not married yet, you've got your evenings, you've got your weekends. Starting with researching, reading all the books, listening to all the podcasts, learning what people are doing that works. I'll keep saying this. So for those of you who have heard it, sorry. But I'll keep saying it. Study somebody who did it and stalk them if you need to, completely legally. Call the people that they dealt with. Like I said in past episodes, I would call buyers who bought investment properties just like the ones I wanted to renovate. And I would ask them exactly who they bought it for, what realtor did they use. I'd find that realtor, hey, who you recommend for financing? And a lot of your questions start getting answered. So rather than inventing the wheel, you actually just ask somebody in your area how it's getting done. There are a million different lenders out there that could help somebody do a deal. In creative financing, there are a million different people that could tell you their strategy that does work, because all the people who their strategy isn't working, they're not doing deals. They're out of the market already. So the ones that you see that are doing deal after deal after deal, those are the ones that are going to help you understand. They're going to help you say, okay, I could do this. And you don't even have to do it in a different market. You can literally just compete against them, grab a deal, maybe
What?
get one that sneaks by them. They don't see it. And you just need a little piece, right? When you're getting started, right? So going back, so what's your strategy? I think a value add strategy is for somebody who's getting started. So that means you're going to go in, you're going to renovate, you're going to add some value. And then I highly recommend, and it's true to me, do it as a rental project. Do it as a rental property. So plan it right from the beginning, and then when you're selling it, you're not selling it on the market. You're selling it as a turnkey investment property. And I guess I've been blessed in a way that I have connections with investors that want that type of thing. But then you don't mind keeping it if you need to, right? If you don't find a buyer, you just hang on. Why even sell? So that's kind of my strategy with it. Now, maybe not everybody has those connections, so maybe you do sell some on the market. There are plenty of books out there about that. But again, we're coming back to this thing. If all you have is one down payment, if you just buy a turnkey property that's already done and you can't add value, then you buy one and you're done. You're just going to sit there and you're going to collect your cash flow if you get it, maybe a couple $100. But then what? Then you don't have anything else.
Well, the general idea is, right? So, say I buy a property now, I'm hoping, maybe in a year and a half, maybe 2 years, there's going to be enough equity paid down from the mortgage that I can potentially use that, pull it out and buy it into another property, even if I don't have to do something on the first property. And it's kind of lower involvement, although I feel like it may be a little bit more unpredictable as well.
It is unpredictable, you're right. Because you could buy it and you're on the right track that you have cash flow, right? If you buy that property, you've got your cash flow. At least you're hedged in that sense. Like, doesn't really matter if the market doesn't go up. The only thing it's going to stop you from doing is buying another. Whereas if the market does go up, I think you were getting at that you would just be able to go back to the bank, pull some money out, and there's
exactly.
your down payment for the next house, right? So you take property one funds property two, which is a great strategy. And for a lot of people, if you have absolutely no time, which I just generally don't believe for anybody, but if that really is the case and you really just can't spare the time to find some general contractors, find the deal, then yeah, that's going to be slow and steady. It might be really slow, but you might catch the wave and find yourself in a market where you're able to refinance in 2 years and buy 2 more properties, or refinance in 3 years and buy 3. It really just depends on your market what it does. Where we've been fortunate. I bought a property that I did nothing with in 2017 March for $600,000, and I just finished a refinance on it and got a $775,000 value. So I was able to pull almost all the money that had been invested as a down payment out. There's only $20,000 left from the original down payment still in that property.
That's fantastic.
Not bad, to have a property that went up in value $175,000 over the course of a year and a half.
It's great. And then I guess the whole goal is, right, you get more properties and more properties, and you use that leverage. Mm-hmm. And so then you really see the value of your entire portfolio going up every single year. But I mean, the real, I guess, problem that I think most people would have, including myself, is just that first one, right? And I think there's a lot of fear involved. So say I did buy this property and I go to rent it out, that seems pretty straightforward, but you're all about the value add. And I think for myself, as well as a lot of other people, how do I know what property makes a good value add property? There's so many homes on the market. What makes you pick, this one's good for duplexes because, the bottom can rent for this, the top can rent for this. This one doesn't work very well because of, some regulation that I don't understand. Mm-hmm. Or
again, there's so many questions that you need answered there. We'd be here for days.
Yeah.
But and that's the problem, right? Like, there's people listening to this from all over, right? We've got all across Canada. We've got all across the States. Every different community is going to have a different answer, right? In London, where I do a lot of my investing, they are okay with you building a secondary dwelling unit in your backyard. You're allowed to do that there. You can build up to 40% of your existing floor area. So whatever the existing house is, you can build 40% of that as a secondary unit in your backyard, even if it's a single family residential zone. Other cities, other municipalities, that's not going to be the case necessarily. So I could be a broken record, or I could give you some tangibles. Of course, just find somebody doing that. See if there's anybody building duplexes in your area. Is there anyone converting? I can tell you, like, we're not far from Hamilton, Ontario, right here, and there's a huge movement, or there at least was for a while, of people converting their basements. And if I see, all these posts on social media of people converting basement apartments, well, clearly there's something there. So the next step I took when I was doing my research, because I almost dove into that market, was go to City Hall, start, like, just literally flag somebody down in plans examination or in the building department, and you just have your questions ready, and you go one after another, come in with a couple example properties. I'd like say, hey, I found this one's for sale. Here's what I'm thinking. Could you tell me, would you have a problem with this, or would you support it? And they would say, well, we could do that here. Well, we have to double check this measurement. You would not believe the value you get out of sitting down and asking questions. Well, what if this? What if that? What if this? When you leave that meeting, your level of confidence goes from, waist high to well over your head, and it's things like that that allow people to invest. It's don't even think about investing if you're not confident. Because if you're not confident, there's a reason for that. That's your gut telling you something. You don't know something that you need to know. When I've made moves that have been profitable, I was confident. And a lot of the reason I was confident is because I'd done what I just told you there. But that was all inspired by my watching other people do it right. I was watching other people do it and do it successfully, studying it. I'd drive around. I would do everything I could. I'd be in those neighborhoods looking around. I'd be looking up land registry, finding out who owned stuff, what they sold for. I'm like, wait a minute, that guy bought that for $200,000 and sold it 3 months later for $450. And I'd be like, well, what did he do? And I look at a little tiny addition and an interior renovation. I'm like, I could scrounge together some people and do that for $100,000, and I was out to lunch. I had no idea what that stuff cost, but I guess I shouldn't say I had no idea. I had a rough estimate, and there was variance, but I was answering enough questions. I'd say I knew probably about 80% of what I needed to know, and then I was ready to proceed. And I think I've heard somebody say that at one point, know about 80% of what you'd need to know to do it, and then start. That's probably the mark, but don't quote me on that. You have to be true to you and your gut. And when your gut says, hey, I know enough, I've seen enough, and I'm ready to make a move. We'll obviously get into the financing side of that, but Aaron, I'm sure you have more questions now.
Well, yeah, that was a whole lot of information that's just kind of been unloaded there. And I think a lot of it was just kind of like exploring knowledge. And, as we started at the beginning of this podcast, you don't know what you don't know. And it seems like in my case, the first step would be, exploring what I don't know and stalking people. Well, I've been stalking you for 6 months and trying to just learn as much as you can before actually making the execution. Like, do you think there's any rush to get into the market?
No, I don't think you should ever rush into the market. I think the old adage, don't wait to buy real estate and wait, is absolutely true. But you have to do it on your terms, and you have to do it in a way that makes sense. I've had people reach out to me and ask me, if they should be worried about, making offers to somebody about it. Is that fair to them? Should I be thinking about them when I make an offer? Well, absolutely. Think about the person you're making an offer to, but you do not offer a cent higher than you can afford to pay based on your numbers, based on your plan, right?
Absolutely.
That's what you do. You stick to your plan. You stick to the one that makes sense, because when you're starting, it is so incredibly difficult to know your numbers exact. You need to have a good margin. You need to be planning on, $40,000, $50,000 of profit, in my mind, depending on what you're investing, right? If you're getting into something that you're going to have $300,000-$400,000 on the line, then you should be budgeting to have at least a $40,000-$50,000 profit. That way, if you're wrong, well, maybe you only make 20.
Yeah.
You're still profitable. And have somebody look over your numbers. Have a contractor look over your numbers. Have a friend, a family member, somebody that cares enough about you that they're willing to do you a favor. and that'll help nail those numbers down, and then you make your move. But again, to going back to your question, stay true to you. There is no rush, but I will say, like, when I say there's no rush, you don't need to do it tomorrow, but you shouldn't be waiting until next year too if you're serious about it.
Okay, and what that makes me think of is, well, here's the thing. I really like the idea. I've watched you do this a million times. You buy somewhere, you fix it up, you either sell it or you keep it for yourself. You refinance it. And I'm at the point where I could probably get a down payment. I could probably secure the property, but I wouldn't be able to actually pay for the renovation. I don't know, first of all, how to plan a renovation as well, which is probably why I'd stalk you for another 6 months. But say I did know how to plan my renovation, I got my costs down. Well, then would I go to my family, or is there a bank that finances that kind of thing?
Yeah, so there's a couple of things you can do. You'll hear a lot of people talk about something called a joint venture, and that's basically where you just go to somebody who's got some money that could be a friend or a family member, and you basically just offer to do the deal with them. Say, hey, I'll do all the work. If you put in the money, and let's split the upside, or let's split the profit. So that's one thing that you can do. So another thing you can do is it's called a private construction mortgage, and that's basically when you work with a mortgage broker typically. In that broker, and they need to be somebody who's experienced in financing construction. So what you would do is you would go in and you would tell them what you're planning on doing, and I'll just tell you how it works here, because it would be similar in other markets as well. What you end up having to provide is you provide a plan of what you're going to do, and then you get an appraisal, and the appraisal is an as-is value currently today, and then a value as on completion. So you can even show them the engineer's plan, the architect's plan of what you're trying to build, what you're trying to do, a list of your finishes, what you're going to do to the property. And based on that, the appraiser will say, well, when it's done, it's going to be worth this. Based on that information you provide, the mortgage broker can now get you a percentage of the finished value. So in my case, the one deal I did, they were able to get me, I think it was like 85% of the complete value. Maybe not quite that much. It was 85% of the starting value. And I think at the end, it was down to like 80 or 75%, meaning that I just added a lot of value. So say my end value was $400,000.
Okay.
So I started at 200. So they were willing to give me, 85% of that, whatever that is, like 175 or
right
in that ballpark, right? And then the mortgage would go up to 80% of, we'll just say 80 for simplicity, of 400, which is 320. Right. So on day one, they're willing to start me off at the base level. So they're willing to start me off at the 175. So that's enough money. If I have my down payment like you do, Aaron, you've got enough for that down payment. You put your down payment in, they cover the rest. And now what they're willing to do is, as you put money in, what I would do when I had this mortgage is I would submit a list of my expenses along with pictures. And if they asked, I'd show them the receipts. And basically I'd say, okay, well, I spent, $10,000 on, lumber, flooring, this and that. And then they would say, great, okay, here's a check. So they'd hold the money in trust.
Okay.
They'd have the money in a trust account, and they would release it to me as I proved I did the work.
Right.
And you can find various ways that this works. So sometimes the lawyer will hold the money. You can find situations where the bank will even fund a situation like this, and they'll leave the money in the lawyer's trust account. So you're paying interest on it from day one, but you don't have it in your hands. But as you do the work, they'll give you the money and release it to you. And really, when you're dealing in private mortgages or bank mortgages that work like this for construction, it's just designed to protect the lender. They want to make sure that you're adding value to the property, and you're not just taking that money and running off and going to Vegas with it.
So, of course, yeah. So
it's a little bit of an extra hurdle, but if you need to do that when you're getting started out because you don't have the money to renovate, that's what you do. It's a little more expensive. It's a little more time invested in doing it. But if it gets a deal done and it gets a deal done profitably, why not, right? It depends on how hungry you are, right? Are you, this is why it comes back to your goals. Like, are you willing to kind of push through something like that? If you got to learn that skill to be able to use private funds, to be able to work with a mortgage broker, Are you willing to do that? What is it that you're trying to do? Are you trying to create financial freedom for your family? Do you want $10,000 a month? Do you want 20? Do you want just a really good retirement? So depending on what your goal is going to dictate the level of involvement you're going to have now. What level of intensity you're going to have now. For me, I want that financial freedom now, right? I already know retirement's good. I've got enough now that I'm not worried in any way about retirement. I know that would be lavish. What I'm really more concerned with is enjoying life now and having the freedom to do the things I want to do now, which everyone's different, right? So I thought I'd share my point of view with that.
Yeah, no, that makes a lot of sense, and that's exactly why I'm wanting to do this. The conventional method is, invest what you can into stocks, put it away as much as you can every month, every year, whatever it'll grow. You'll hopefully be able to retire. Whereas an example, and this is one of the most important things I think I learned from stalking you, is that a single property, and I'm 25 right now, right? And you retire at 45, 65, but you say an average mortgage is 30 years. If I buy one property now, and say the rent is $2,000 a month or $3,000 a month on it, by the time I'm 55 and that mortgage is paid off, I don't have to do anything else, and that's what I would be making in today's dollars. So
yeah, you'd have like the 3,000. So normally you say your mortgage is going to be what, like 2,000 on that maybe. So just hypothetically, you're collecting 3,000 in rent, your mortgage is 2,000. You've got some property tax, you've got some insurance, a few maintenance things. So you're still making, if say you were making $400 or $500 in cash flow now, the second the mortgage is paid off, that's an extra $2,000.
Exactly.
An extra $2,000. So now you got $2,500 at retirement, when most people don't have anywhere near that kind of thing coming in from a source other than their pension. And a lot of pensions here in Canada are in concern. Not a lot of people are getting enough from their government pension. And I'm sure that that's a situation that's similar in the States too, where you need to have a plan. And that was where I started. I'm like, whoa, this whole system, it does not make sense.
It
right?
really does not make sense. It does not prepare you for financial success in retirement,
Yeah. Well, your most capable years of your life are now, right?
Absolutely.
So right now, everybody, if you're in your 20s, 30s, you're more physically capable than you're going to be in your 60s, 70s. And you're making more money now. If based on the conventional model, you're making more money now when you don't have the time to use it.
Exactly.
So, but you're living in urban centers, spending more on things to work, and and you have no time to take vacations, what have you. And then they say, oh, well, you can retire and go on vacations, play golf. But for most people, they can't, because they're not making enough money to do that.
Yeah, they retire, and most people will buy one house and they will live in that house, and hopefully that's paid off by retirement. But I'm trying to think of it that a different way. And from what I've learned from you is, I'm 25 right now, mortgage is 30 years. If I can buy a single house every year of my life until I'm 35, I will retire with 10 properties fully paid off by the time I'm 65. And that means that, I realistically will be in a great place financially. And I think it's really worth it to work hard. And yeah.
Yeah. Well, 10 properties around where we are, if you said that they're on average, like, I don't know, $400,000 or $300,000 today. If they're that price now, what are they going to be worth when you retire? Obviously, knowing that properties go up in value. But even if they didn't really, say they just went to $500,000 on average, that's $5 million in net worth when you retire.
Absolutely.
When they all pay off. If at that point you go invest that in some stocks even, or even in private mortgages at 10%, you're making a pretty large chunk of money.
Absolutely.
Yeah.
Yeah.
That's $500,000.
Yeah.
10% of 5 million. So the possibilities are endless if you buy real estate. Like it's just, to me, it's so shocking that more people don't. I know a lot of people are like, oh, but I don't want to deal with tenants. You know what? Get over it.
Absolutely. Yeah.
Who does? But at the same time, like, you get systems in place and you work through it. It's not as bad as it seems. Once you get a little experience under your belt, you can try property management, and that can work. I've seen a lot of people do that. I've used it successfully and unsuccessfully at times. But there's lots of ways to go about it to make it work. It's just important that we as Canadians or North Americans, for our friends in the USA, that we do something to set ourselves up for retirement. And I just can't think of something that earns people more money. Spencer Gatton was on the show. I just released that episode on Friday, and he generated 41% return on investment from his duplex on the most conservative numbers. I mean, Warren Buffett is not getting 41%. Now, granted, Warren Buffett doesn't have to roll up his sleeves, and he's not having to do as much on his investments. But if that's the sacrifice we need to make to get ahead, I think that's something we do. I mean, that's just these are my thoughts. I'm not asking everybody to agree with me. You have to decide what it is that you want out of it. But anyway, so getting back to the financing, I know we talked about private mortgages. So the banks also do, and it might go by a different name, but it's called a purchase plus improvements. So that's something we can do here, and it's similar to the private mortgage route where you get the appraisal, now and on complete, except what you do with them is they're just willing to lend you a percentage of all your expenses. So if you're buying a house for 200 grand, say they're willing to lend 95%, they'll give you that, whatever it is, 190. Yep. And then if you say, I want to do a renovation too, I got 2 quotes. That's what they make you get, 2 quotes from contractors, and they say $50,000 each. So $50,000 is the quote. What they'll do is they'll fund you 95% of the extra 50. So you'll get another 47.5 thousand. So they'll put an extra 47.5 thousand, so 47,500 with the lawyer, and that money would be released to you as you proved you did the work. So you'd have to pay it up front. So you could even put it on credit cards or what have you as you do it. You just got to show the lawyer a receipt, and the lawyer will pay it. The other thing you could do is bring the lawyer the invoice and have the lawyer pay the contractor directly. They just have to confirm that the money went to where it was supposed to go.
Absolutely.
So that's the other way of doing that. Check with your local lenders. I did just have a call with an investor friend that I met on Instagram the other day, and he wanted, he'd been flipping some properties, wanted to start keeping some, and he mentioned that his lender would tap him out if he wanted to buy rental properties. It would basically stop him from buying his home. The thing I want to iterate here is don't take a no as actually meaning no. I've actually gone to the same lender. So we have a bank here that so my future mother-in-law is in private banking, and she referred me to this lady. So that's supposed to be the special banking where you get special privileges and, they treat you really well and give you special deals that other people can't get. Well, long story short, I send her my file. She's like, oh no, we can't help you. Like, no, you won't even come close to qualifying. Like, no, we can't help you.
Oh, geez.
She was just so rude about it. And then, and she did this over email. It was like, she was like indignant in the email. And then she like tried calling me and like, Andrew, call me. We'll discuss this. And I'm like, you know what? No, I'm good. So I just continued on, and I ended up finding just through, again, I'm always doing this. I'm asking my real estate investor friends. I'm watching them. What are you doing? Who are you using? Who's working right now? Which lenders are saying yes right now? Oh, well, I have this guy, and he's been getting stuff done. Well, sure enough, that guy worked for the same lender, and he was able to get me approved. I literally called him, had the same conversation. He's like, oh yeah, you know what? No, that's easy. We can just, there's a special little thing you can do, and it works. I'm like, oh, that's great. So anyways, I needless to say, I got a deal done. And to me, it was a Hail Mary. I'm like, this is probably not going to work, but it doesn't hurt to try. So here in Canada, we got like 5-6 main banks, and then we got a bunch of credit unions. Our options are quite limited. For our friends in the States, like you have hundreds of lenders. A no from one does not mean a no from all, or even that you can't get it done with that one that said no. Not all people are equal, right? So you need to look for your friends who are doing what you want to do and find out who they're using. Even pay them for the information. It's cheaper than banging your head against the wall and wasting money or losing money.
So basically, stalk people and stalk the people that the person you're stalking is stalking, basically.
We should probably use a different word other than stalking. But in real estate, I just can't think of anything that works better. I mean, you can read all the books you want, but we all know that there are certain things that aren't said. There are certain things you just can't get from just reading a book. That might have worked last year, but what about this year? So it always just, I found for me, it always just pushed me over that little threshold of I have enough confidence now that I'm ready to move. And yeah, so what I wouldn't suggest, quote unquote, actual stalking. It's more talk to the people, call them. I know it might be uncomfortable, but you know what? Most people are pretty decent. If you call them and you say, hey, like I'm actually looking to buy right near where you bought. And I was wondering, you know, who you used to buy your property. People are happy to talk about their real estate deals. Who isn't? Oh yeah, I bought one. Yeah, I like that. How you happy? How you liking it so far? I'd ask them, like, hey, I saw you bought a student rental down there. I was just curious how you're liking it. I own property in the area as well. And they're like, oh yeah, I really like it. It's worked out really well. I'm using this company to manage it. Yeah, if you don't mind me asking, which realtor sold it to you? Oh yeah, this person.
Yeah, I think that makes a lot of sense. Like anybody who like is really passionate about something is happy to talk about it, is happy to give advice. You ask someone with nice rims on the car, you could be like, oh, I love your rims. How did you choose that style? Of course they're going to talk to you. It's the same with real estate, right? It'd be the same with everything.
That fundamental that people love to talk about what they're doing has made my real estate investing career. A friend of mine, we've just always shared stuff about real estate. Like he started as a realtor, I started as a mortgage guy, and we would share stuff. Like hey, how are you getting stuff approved? Well, here's what lenders are doing, and I'd ask him, well, what are you seeing going on in the marketplace? And he'd tell me what was happening. So we stayed friends right from like shortly after we graduated to when we started doing deals, investing in property. And then, he's gone on to do millions and millions and millions, probably in the 10 to $15 million portfolio range right now, I would say. I might be underselling that.
I hope you're still calling that guy.
Yeah, I know. I talk to him all the time. So that's a critical thing is that I maintain that relationship, and it's a give and take relationship. I'm always seeing what I can bring. We share contractors. Hey, what are you paying this guy? I pay him this. Oh, what'd you pay? So it's kind of like a friendly business relationship where we help each other by sharing what we're doing. It benefits him, benefits me. And if you can find that type of relationship with somebody, even if you have to work for them for free, somebody who knows what you want to know, why not offer to work for them? They want you to scrub their floors, scrub their floors. If it gets you in the room when they're making calls about business, you're learning.
Absolutely.
If it gets you, anywhere near, if they want to run some sort of operation, I don't know what they're doing. Maybe you can help them with their books. Maybe you can be their bookkeeper. If you don't know how to bookkeep, go online and learn it on YouTube videos and say, yep, I know how to use QuickBooks. You know what? These are things you could do. You get yourself in that office, you get yourself around that person. And now all of a sudden, something. The other way you can do it is pay them for coaching. That some of them will, some of them won't find it worth it. But, what does it hurt to ask, right? If you're determined to learn, these are things you'll do, right?
See, I think you just described it as like, pay for coaching or work for someone for free. Whereas I think,
which is the same thing.
Yeah, exactly. If you're working for someone for free, you are getting free coaching in my mind. It's like, and more so than that, like just from what I've learned with you in the past year, is all of these ideas that I've had in my head, I should buy this duplex and, build another unit on the back. Then I've got 3, I could take the money out. All of these ideas I've watched you do stuff and execute it. And I think the biggest thing that I've gotten out of this is watching you make something, happen makes it real to me. And it makes it, so more so that I'm actually going to jump on it. And I think the coaching aspect is one of the biggest things that helps me at least get ahead.
Yeah, you can't be listening to the people around you who aren't doing it. If you're listening, like if you're working with a realtor that's never helped anybody renovate a property or never helped anybody buy investment properties, never done it themselves, even if they've helped somebody buy investment properties, if they don't do it themselves, they're not going to be very good at advising you. And that's not to say don't work with them, but if you don't have somebody helping you who does do it themselves, then where are you going to get your confidence from to do it?
Exactly.
Yeah. So that's critical, right? Like I would say try and find a realtor that invests themselves, but that's a double-edged sword because sometimes they're going to take the deals from you and you're going to get their scraps. But to be quite honest, like if you're working with a good enough realtor, like they can only do so many deals and their scraps could be really good scraps. I've been in that type of situation. They're like, well, I took that deal and this deal, but I have this other one that I'm not going to do because it's, it won't make me quite as much. But I looked at the deal. I'm like, hey, that's still a great deal. I'll do that deal.
The whole like
Yeah.
one man's trash is another man's treasure
Yeah.
thing could be so real, right? Like maybe he's only dealing with 10 to 15 unit buildings now, and he found this great duplex, and he just doesn't want to deal with it. It's not worth his time. So
Yeah.
I mean,
Yeah. Like, so that was
Yeah.
that was my friend. He'd be doing, he'd be doing student rentals that say didn't need an addition, right? He didn't want to have to go through that extra work. Whereas for me, I was willing, he's taking all the ones that are already big enough. They don't need it. I'll take the couple that need an addition. If I want to get that fifth bedroom, I gotta build a little bit of an extension on the building at the back. And I didn't know how when I said yeah, but I'm like, well, I've seen other people doing it. I could figure this out too. And that was kind of how I proceeded. The first one terrified me, really did. But it was sink or swim, and I learned to swim. So.
And you slept in drywood.
Drywall, yeah.
Drywall, that's the one.
So I will tell.
Yeah.
I don't think I've ever told this story in full context, but what I used to do on my first fairly significant renovation project, it was a student rental. I was renovating it to rent it out and hopefully keep. I didn't end up keeping it, but it was the starting point. So I was there. I was babysitting. I like to use the word babysit. Babysitting trades every single day. So all week long, I didn't have a place in London. I was, home was Burlington, which is an hour and a half away. So I didn't want to pay for a hotel at the time because it wasn't like I had that much cash kicking around. It would make the profit significantly lower. So what I did was I sleep in the project. It was summer. I'd throw down a piece of poly. So that plastic, I'd throw it. It'd be really dusty and gross. And, the poly ended up getting dusty. But anyway, so I had an air mattress. I'd throw down a piece of poly, threw the air mattress down, blew it up with the shop vac. So I turned the shop vac on reverse to blow up the air mattress. and then I'd have my blanket and my pillow, which I stored in the shed during the day. So then every morning I'd wake up when the sun would rise and I'd have like the morning dew on my face because this building was not even like closed in yet. And I'd have people try and break in. Like some nights I was there, I'd have like literally like homeless people tried to break into the house because they see a house under construction and they're like, oh, money, let's go look for tools. So I just like shine my flashlight at them. And, it was
That's hilarious.
It's a ridiculous thing. But again, I was determined to make it a profitable project, to make it something that, I could hopefully refinance, but, worst case I could sell and profit from. And, so in the morning, anyways, the morning dew would hit my face, but then I'd hear the guys come, they started at 8 a.m. I'd hear a door shut. I'm like, oh, better back up, deflate the air mattress. I turn the shop back on, suck the air out of it, pack it up and walk out the back door. I'd be like, oh, hey guys, how you doing? What's up?
That's awesome.
Anyways, like I just thought I'd share that because I think that's actually hilarious. And I, for some reason, did that quite a few times. But, it's funny now. Like I don't even like staying in a hotel that's like, I don't know, like it's weird. It's funny how I could go from that to like I'm being picky about what hotel I stay in.
Well, I mean, if there's a project good enough, I'm sure you'd do it again.
Yeah. You know what? It just goes, if you're excited about something, like heck, what's the big deal, right? It really sucks doing that, but when you see the money coming from it, when you've been kind of banging your head against the wall and you finally see something work, it's not such a bad thing. It's actually kind of fun.
I mean, that'd be really cool too, because, that'd be really cool to see everything come together. Framing a basement. Like, I wouldn't know how to frame a basement, but like, since you were there and, you supervised the trades, you saw everyone doing everything, you would have picked up so much knowledge.
Yeah, that was a big thing. Like, I feel like I have most of the knowledge of how the entire thing works, right? I'm not saying I'm going to be a good drywall taper. Like, I'm not going to go in there and do that myself because that's a highly skilled job. But I understand what goes into it very well. And, I know the parts of the project. I can talk shop with an engineer. I can talk shop with a carpenter, and they understand that I know what's going on too, which is a huge asset. To know, you can call people's bluff. You can call BS, right? If you don't buy what somebody's saying to you, you say, well, wait a minute. No, that job shouldn't take more than a few hours. I could do that job in a few hours, and you start saying they get it. They're like, whoa, okay, we gotta stay honest here. So. I'm not saying that excuses you from getting multiple quotes on things. It doesn't, but it definitely helps you in the process to to basically maintain a relationship and stop people from taking advantage.
It'd be really cool to see the progress though in real time as well, right? I mean,
oh yeah, I loved it. I loved it. I said this before. I went to business school. I never really got to do any of that kind of thing. So, being on site and seeing stuff like that happen, and even being able to help out a little bit here and there on some of my rental properties was huge. I really, I'll always remember that.
yeah. So you have done manual work though on some properties.
Yeah, absolutely. I don't do it anymore, but when I started on a couple of the first rental properties, I helped in the renos, and I was there every day because, again, I was so afraid because I'd been taken advantage of back in Ohio. I had lost money. Things had gotten out of hand. I was like not willing to trust anybody at all, and I wasn't willing to let them out of my sight. And eventually, and within good reason, hiring people off of Kijiji and Craigslist, you really do have to be careful. Yeah, I was getting people with criminal records, like just the wrong stuff, right? So I would be there, and I'd have somebody come to site, and I'd watch them work for an hour. I'd say, hey, sorry, this isn't working out.
Yeah.
I had one guy, he's like, yeah, I can do that. He sold himself on the phone. I'm like, okay, well, we can try it out. I always phrase it that way. Okay, well, we can try it out. Come on over, we'll try it out. And if it doesn't work, it doesn't work. So he came over. I'm like, yeah, sorry, you're going to need to go. So, well, what do you want me to do? I'm like, I really don't know, but I mean, you're going to need to go.
So do you think I could do that then? Do you think like I could, buy my first house and then just like watch a whole bunch of YouTube videos, how to frame a basement, how to drywall, how to lay flooring, and then just do it?
That is pretty much what I did.
Yeah.
I'm not recommending that because it actually does make it so that things don't work that well. Some things weren't as good as they could have been. So I'm not recommending that. But I'm also not recommending it. So I don't really know what to tell you on that. I think that it'd be better if you can find reputable trades, sub-trades. So still general contract it yourself, go on YouTube, but be willing to hire a framing company to do your framing. Be willing to hire a flooring company to do your flooring. If you don't like their quotes, yes, YouTube is your friend. You can hire your own people, but find people with experience. Find people who have done it. Flooring is something that's it's pretty hard to screw up, but I have seen it done. So, it depends on the type. I'm not saying it can't be. I think that you really do have to be careful about who you give what job to. I luckily am a pretty keen study. So yeah, I did study the heck out of stuff when I was a kid. My parents built their own houses, so I kind of had an eye on it when I was like 10. So it was a long time ago. But and then I just YouTube, man. YouTube's your friend. Not everybody needs to do this. Like this was my path. I would say I know Spencer, who was here the other day. He was all about general contractors. 5 quotes on finishing this basement. That's the other approach, and that approach is like you have a rock solid list of everything you need done and exactly how it is to be done, and you have people go out there and execute, right? So you basically put a document together and you say, quote these finishes, this is the level of expectation. Go find a couple other examples, like find other contractors' quotes and see how they've laid them out, and see if they're covering every detail. And do it that way and get 5, and then you have apples to apples. But it's better if you give them the list and you have each contractor quote on that list, and then you know who's cheapest, right? And then pre-discuss if there are overages, how are they billed, at what hourly rate, what things could go over, how would they go over, if there's a change, how's that going to work? These are things. Maybe even talk to your lawyer. Make sure it's bulletproof, because otherwise you're going to have problems. It's just inevitable. You will have problems. It's not an if, it's when.
Yeah. Yeah.
So you just got to be ready to deal with it. And the better your contracts are, the better your agreement with your contractor is, that's going to make that's going to make those disagreements work out a lot easier.
So do you think I should just, I kind of like that idea, you get 5 contractors and, you compare all the quotes. Should you just go with the cheapest price? Like, is there any reason not to? I mean, if they all have insurance, if they've, in theory, done all their due diligence.
No, I would typically want to throw away the lowest quote. It depends. Here's the thing that I would do. if it is a low quote and you have a feeling that they'd be good, ask them to go see their current work. And I mean actually go see them on the job site. Make them show you a project they're currently working on. Ask to speak with their current clients, past clients. I'd recommend this before you hire anyone. Find somebody that's a trustworthy person. That seems to be, right? It's hard to know for sure, but find somebody that's trustworthy, and they're probably your better. Even if they're a little more expensive, don't go with the cheapest person if you have a bad gut about them, because honestly, it'll just cost you more money in the long run. The headaches, the terrible things, like I've had the police at my sites getting rid of people. Like you don't want to go that route. Just because it's cheap does not mean it's good. And I definitely I started off too cheap. I was trying to do things too cheap. There is a delicate balance. And you definitely don't want to just pick the cheap one. You want to pick the best value. And the best value is the person that's not going to come back to you asking for more money, the person that's not going to come back to you and tell you that things didn't go right or oh, we screwed up, or just not show up. You want a person that seems like they have integrity. And that's the other part, which we talked about the other day, is don't be giving them deposits up front. I am going to hold a very, very hard line on this, that contractors do not get an upfront deposit. You can buy the materials yourself and make sure they're on site for those contractors, but they do not get a deposit up front. And I can't stress that enough.
So then would I pay them, as they do the job, or do you just pay them at the end?
I would pay them on milestones, and you're going to have plenty of people that aren't comfortable with that. But there are some people that will, and I'm not looking to rip anybody off. I'm just looking to protect myself based on past experience. So I would say, absolutely make sure that you structure it so you can pay them weekly. What do they want? Like, how often do they want? Are you being reasonable? I would just say be reasonable with them. Like, hey, John, like I've had issues in the past with deposits, so I don't do that. I will supply the materials to site that you need. You just make me a list. And as far as milestones go, let's pick them together. When you're done, task A, this is when 10% of the money will release. Task B, right? If you guys are done task A in 2 days, I will have a check waiting for you. If you guys are done, done task B in a week, then that's when my check will be waiting for you. Who could really argue with that? And if they're not cool with that, then why? That's a red flag in my opinion. So
yeah, I guess so. I mean, if they're not cool with, being paid as the job gets done, I guess that doesn't really make sense. But the hard part for me and where I am right now is I don't really know what does and doesn't make sense. I don't know all the averages and the norms.
Yeah, and they're going to see that on you, right? So I think all you can do is you put your best foot forward, you be professional, and there are still contractors out there that want your business, right? It might be a little harder for you as a newbie to get people to want to quote on your work because they're not sure whether to take you seriously or not. So sell yourself. You got to sell yourself to them as to why they should want to work with you. Just have a good reason. Hey, I'm an investor. I'm planning on doing many more properties. I'm looking for somebody to grow with. I am, to be honest, I'm getting started, but, here's what I'm looking to do. I have financial backing. I'm ready to do this. And, and the more prepared you are, if you have your structure, if you can propose how it's going to work, do your research to them, you'll prove to them that you know what you're doing, and you'll make it worth their while to work with you.
Yeah. That makes a lot of sense, I guess. It's just, I guess now it's a matter of buying that property.
It is a matter of buying that property. But again, Aaron, I would say, go back to your goals. What is it that you want to accomplish out of it? And that's going to really dictate this, right? So you being a pilot, I know you're about to be on probably 15 days of work a month. But,
yeah, probably around there.
But you're gonna have on again, off again, a little bit unpredictable. That could make it difficult to manage a renovation.
Yeah.
Not impossible. It's just going to make it a little bit more difficult. So maybe if you work with a partner that can work around here, maybe you guys can split the task.
Right.
Maybe you find another pilot that's interested, and you guys kind of split it between the two of you, knowing your schedule. So there are options, but it's really just a matter of kind of doing the groundwork. And I manage from a distance. I'm an hour and a half away from my projects, and I'm down about once a week usually to look in on them, but sometimes it's once every 2 weeks. So it is possible, but of course, getting started, you might have to to grind it out in between your trips, right? You come back and you spend a couple of days wherever your property is, and get things back on track. And I'm sure you can make it work.
Yeah, no, I definitely agree with that. But I was just thinking, yeah, I guess I'll be away 15 days, but can I work from the phone? Can I just, if I go with the whole general contractor method, then, in theory, I could just call him every couple days. Hey, how's this going? How's this going? Do we need any more lumber? Like,
yeah,
any problems with the zoning, anything.
Heck, you could leave the checks with a friend or a family member, and you just say, hey, like, whenever I give you the go ahead, please drop this check off to this person, right?
Yeah.
So you can get email money transfer.
That makes sense.
You can set up direct deposits, whatever you think you need to do. There is a way to make that work.
Yeah.
Awesome. Are there any other questions that you think people listening or watching might have for me, or, I guess, for me or you, as to the process and what they're trying to do, or what they should be trying to do as a real estate investor getting started?
No, off the top of my head, I don't really have anything. I think we've kind of covered a whole bunch of general topics. We kind of just had a conversation tonight, so
yeah, it's a bit of a different format.
Yeah.
So
I think a lot of wannabe investors, that's what I'm calling myself, wannabe investors like myself would probably get a lot of value out of this, and just learn that, I guess, seems like confidence is the first thing that you'll need, and you get that by following someone that's done it, which is kind of what I've done with you, and then it's just the execution, and it's all in the head. I just got to do it.
Yeah, just got to do it. Yeah. Okay, so Aaron, if people want to kind of check you out and what you're doing, what's the best way for them to do that?
Sure. If anyone wants to check me out, you can find me on Instagram or YouTube. Just a handle is The Pilot Aaron.
Yeah, The Pilot Aaron. Nice and easy. And you can find me on Instagram at oneofahinds, Hines. I may change that in the future, but for now, that's the one. I also have an email, but it's probably best to just reach out to me on Insta. But if you do want to email me, just head on over to my website, andrew-hines.com, and just fill out the contact form there. But for now, if you wouldn't mind, subscribe to the podcast, leave me a nice review, and if you have a constructive question or any sort of feedback in terms of how we can make this better, by all means, just send me an email and let me know, and I'll do my best to implement it. Thanks a lot, guys. Hope you enjoyed this. Hope it was informative for you, and we'll see you on the next one.
Woo!
Thanks, Aaron.